be a big boy and like pay attention to the financials and look at your cash flows, look at your margins, and make sure things make sense. So.
And I want a good show, damn it. Ready for a good show?
Doing awesome, yeah. I'm excited to talk to you, Angie. Thank you for having me.
Yes.
I've always been big into archery, and my dad said, "Hey, you guys want to start an archery store?"
Yes, that's how I always do.
Andrew, yes, of course. Let's do this together.
Hello, everyone. Welcome to another episode of the E-Comm Show. Hello, everyone, and welcome to another episode of the E-Comm Show. I'm your host, Andrew Maff, and today I'm joined by the amazing Abir Syed, who is the co-founder over at UpCounting. Abir, how you doing, buddy? Ready for a good show?
Doing great. Thanks so much for having me.
I am so excited to have you on the show. One, because as soon as we got on this little thing that we use here, you're super fun already to talk to, which for accounting, not always the case. So I'm gonna I hope you like that setup. I think this is gonna be fun.
I totally agree with you. So.
Hey, you know what, man? It's one of those things where it's like an incredibly important, like if not the most important element of any e-commerce business, and I don't see why people can't make it fun. And so far, you're crushing it. So let's show the world. I always kind of start these off relatively stereotypically for the most part. I kind of give you the floor. Tell us a little bit about your background, how you got started, how you started UpCounting, and then we'll take it from there.
Sure thing. So I'll try to keep it to the super short version, but basically before UpCounting, I was VP Finance at a startup, fairly well-funded one. We raised about $60 million. While we were there, we acquired an e-commerce brand, and due to some strange HR mishaps, if you will, I ended up running the brand essentially. So had an opportunity to just kind of get really, really deep into the e-commerce stuff, sending emails on Klaviyo, updating on Shopify, answering tickets on Zendesk, just really doing everything end to end, working with the agencies, eventually taking over, running the ads myself. So kind of fell in love with the e-commerce space and got to know it very intimately. When I left, I realized that there was a lack of accounting support or expertise in the e-commerce world. E-commerce is an industry that is especially dynamic. They kind of make decisions very quickly. The need for data is very high. And because of the fact that they tend to operate on like these really thin contribution margins, trying to spend as much on ads, get ROAS as low as you can while still remaining profitable, the need for good data is a lot higher than these more old school industries where like they kind of operate on quarters and years. E-com is like operating on days and weeks. So basically, I knew there was an opportunity to kind of support e-com brands. I happen to be a pretty good accountant, and on top of that, I happen to know e-com quite well. So for me, it was just a very easy, simple fit. Theory seems to have borne out. We're about 45 people now, but should provide bookkeeping, accounting, CFO services to support e-commerce brands grow.
Awesome. So with where you were at before, because that's a very interesting story that you just kind of got tossed into that. And then it sounds like you also kind of dived into some of the marketing side, which obviously being a data-driven person, that's a fantastic skill set to have. How can you tell us, I know you probably can't tell us like the actual name or anything, but like what was the brand that you were running, like product line at least? It
was in supplements, so mostly protein bars.
Oh, fun. Okay. Yeah. Challenging enough. So on that side, how did you started to kind of get into the marketing side a little bit there too, but you were overseeing basically the business as a whole, even from an accounting perspective?
Yeah, everything. I mean, I was still, for the parent company, I was still a VP Finance, but I was fortunate that I was able to hire someone pretty solid that was able to kind of support me on that. So freed up a little bit of the day-to-day side. So really just kind of handled everything on the e-com side. Eventually hired a couple other people. Not all of them worked out, but really kind of the buck stopped with me with the e-commerce side. So that's why I had the agencies at the beginning, hoping they would carry the weight. And when I realized they weren't doing a great job, I'm like, I can figure this out. So I did that too. Nice.
So very interesting. Okay, so on the UpCounting side, obviously, so you're there, you found the hole in the market, started to create UpCounting. The accounting side's very interesting, right? Because it's wildly important, but it's one of those areas similar to marketing, I would say, where like you struggle to figure out where do you draw that line. Where is it no longer, the CFO's job and it's someone else's job? So like inventory management, that type of stuff, as you start to bleed into those costs of what it's going to take to get it manufactured, and then when it's got to come and how it's cash flow and blah blah. So, in the terms of UpCounting, how do you kind of draw that line? What are the specific like services that you offer, and where does that line get drawn?
Yeah, it's a great question. So on the one hand, one like kind of just foundational piece of it is us making sure that we keep track of all the transactions that take place within a company. So anything that includes a dollar sign, would that be your bank account, credit cards, the dealings that you have with different entities, your manufacturer, goods being shipped back and forth. And we just make sure that all of that data is categorized accurately and in a timely fashion so that you get very reliable information quickly so that you can make decisions better. And then on top of that, we're able to kind of build out processes to just basically make that whole thing a lot more efficient, provide more ad hoc reporting. And then for the brands that are a little bit more advanced, that are growing more rapidly, that want to make a little more aggressive strategies, if you will, then we can provide, the cash flow forecasting, the financial modeling, stuff like that, so that they can have a little bit more predictability into the future. To my mind, the reporting is really where a lot of the rubber meets the road, if you will, because even if you have a good accountant who can put together the numbers and they're accurate, the truth is that most founders aren't necessarily that comfortable in the spreadsheets and with financial statements. So you can kind of look at it and your eyes might glaze over a little bit like, hey, okay, I can read the numbers, but it's not really like landing. So basically that was why I kind of started building out these visual dashboards that kind of show trends and a little bit that takes the financial data as well as some of the e-commerce data, presents it in a way that, again, having run a brand, I would think to myself, this is how I would have wanted data presented to me, where even if I don't have that much financial savvy, I'll still get the point and be able to better make decisions with that information.
What is that like your own proprietary platform? Are you guys using something like a Looker Studio, or like how do you combine all that data?
Yeah, it's a Frankenstein of a lot of different tools. So pulling in data from like the various platforms, like a Supermetrics type tool, another one that pulls in data into QBO. That's all kind of manipulated in database / Google Sheets, and then that's pushed into a tool similar to Looker Studio for the visualizations.
Interesting. What type of brands are you working with? Is there like you typically find like, hey, unless you're surpassing X revenue, or are there actually like certain industries you focus on? Like, tell me a little bit about who you guys work with primarily.
Yeah, it's a good question. I mean, the thing about accounting is that technically, especially in e-commerce, like I don't really care that much about the difference between a beauty brand and a supplement brand, for example. Like, sure, a supplement brand might have a little bit more nuance around expiry dates and the way that they track their inventory with lot codes and stuff like that versus apparel, which doesn't. But at the end of the day, from an accounting perspective, all the fundamentals are the same. So industry-wise, we're pretty agnostic, and size-wise, it's basically we can support anybody, but typically I'd say once someone's doing above $1 million in revenue, that's when they're a good fit, and we can kind of handle them until they're 25, 50 million, really until they get so big and so complex where they just really need to build an in-house team. Oftentimes, it's not so much a function of size, but complexity. So once you start doing a lot of wholesale, a lot of different sales channels and stuff like that, you have different locations. If you do your own manufacturing, that's where the complexity can get fast or go up quite quickly. In terms of clients, probably our best known one is Obvi, just because those guys are everywhere. So that's one that a lot of people know. But then we work with a lot of other ones like ManMade, who's a very well-known kind of like underwear brand for men. Rival Boxing, if you're into fighting sports, they're pretty well known in that space. So I got some cool ones.
Nice. Is there a limitation to like sales channels? So do you only stick to the e-commerce element, or is it also still work out if they also have like a retail presence or something like that?
No, good question. Shopify is our bread and butter, but no, we're pretty much comfortable with any sort of sales channel. Obviously, most brands will eventually kind of expand outside of Shopify. So when they go into wholesale, if they're using EDI, if they're on Amazon, all that stuff, it's all within our comfort zone. If anything, most accountants are more comfortable with the wholesale stuff than they are with the Shopify stuff. That's where stuff becomes a little bit too digital for them. So if we can handle Shopify, everything else easy peasy.
Yeah. And it's the same for Amazon, right? Like I think you guys also do have a pretty big focus on the Amazon side. Is there like a different kind of approach to how you have to deal with that? I guess maybe because of like FBA fees and something, or I really could just be guessing.
No, you've got kind of the idea. The only thing we're able to handle it. The only thing that makes Amazon a little bit more of a pain is because of how awkward the reporting is. So Amazon doesn't give you the best data. So it's definitely like we've kind of developed a process to be able to pull that data and figure out how to account for it. But that's the thing that definitely a lot of people struggle with. We've taken over books many times in the past where people will just, for example, look at the little bit of cash that you get, book that as your sales, not realizing that includes FBA fees and your ads and your all your transaction fees, your Amazon commission, all that. So it's just there's more reports to kind of break out, as opposed to Shopify is just mostly transaction fees, taxes, shipping. So a little simple.
Okay. What at what point do you kind of draw the line on I guess presenting the reporting and then also like the consultation side. Like to give you an example, I can't remember when this was. We had the founder of ButcherBox on the show, and he was given so much information. It was really cool. For those of you listening, if you haven't checked it out, it's a very interesting episode. He gave some insight into how they deal with manufacturing because of issues with lead times, especially with meat, and then basically how he's able to use that to project cash flow a lot easier than most brands can, because typically, you're placing a pretty large order and sometimes it's as big as like net 90 terms or something like that. And it gets kind of ugly. Like, at what point do you get involved in providing insight when you're looking at things like that and you're projecting cash flow for, manufacturing orders that they have to place?
Yeah, it's a great question. It all comes down to kind of the scope of the arrangement that we have with every brand. So for the larger ones where we're kind of working with them on the CFO level, we try to provide them insights wherever anything comes up that we're able to identify. So for example, with some of the larger brands I work with personally, we'll kind of get on weekly calls. We'll look at their cash flow. We'll kind of talk through the various items that are significant that are coming up in the pipeline that we'll have to be worried about from a cash outflow perspective. And we'll have conversations about that, whether there's different ways to kind of finance it, different ways to kind of make arrangements with the manufacturer. And then even from a long-term perspective, how do we get over this upcoming hurdle, but then how do we kind of make things a little bit better for us in the future? So ultimately the goal is, philosophically, we're just trying to provide as much value as we possibly can from the perspective of like all of our expertise, everything we've learned. So even if that goes beyond the kind of accounting and finance side of things, at least speaking for myself personally, and I can't say everybody on my team has this expertise, but I'm a little special in that regard. I do quite a bit of media buying as well. So I also have quite a lot of insight in terms of kind of like how the ad platforms are performing, how things are going, how much of a reasonable investment one can make, whether or not the assumptions you're making about your growth are actually something that is, realistic. So from that perspective, again, if I can have that conversation with the brand, even if I'm not their agency, I'll still have that conversation with them to make sure that any sort of insights I can share with them, I'm able to provide, because at the end of the day, I just want everybody to win.
Yeah. Isn't that a kind of a different skill set? Like, in my opinion, the accounting side is very black and white, right? Like, it's very much like, here's what you have, here are the facts. It kind of is what it is. With specifically with paid media, I would say more so on like a meta side, when you're involving like creative and targeting audiences versus like specific keywords that have a standard cost per click and stuff like that. And then obviously your creative kind of gets involved in how the interactions are with that. How do you kind of make the judgment on those when there's a little bit more of like a finesse to it, I guess you'd say?
No, it's a fantastic question. So to a certain extent, when it comes to like me being in an ad account, specifically just like any other media buyer would, right? Like you have your understanding of what works from a creative strategy perspective. You have a lot of experience. You've seen a lot of ads work. And then you also know, generally speaking, from having run a lot of accounts, how stable you can expect that sort of ROAS, or how well that ROAS will hold as you start scaling. So to a certain extent, it's a little bit of that. If I'm working with a brand and they are, for example, they just raised money, they're kind of projecting out some pretty substantial growth in the new year. Oftentimes they'll come in and they'll have these like sort of hand wavy sorts of calculations like, okay, cool, we're at about a 3.7 blended ROAS now. We're thinking that over 2025, we're going to increase our revenue 20% every single month, and our ROAS is also going to increase over time. Like, that's obviously a silly example, but that's the kind of thing I can look at and I'm like, yeah, that's not going to happen unless you decide to also allocate some massive amount of money to creative strategy. But even then, you'd also be able to have a bit of a proof of concept that you can sustain your performance at that level. And part of that is also just knowing, having some amount of marketing awareness to know the kind of product you have, how big your TAM is, and what sort of realistic likelihood there is to be able to scale to that by looking at competitors as well. So part of that just comes down to, I guess, judgment and marketing experience, I suppose.
Touche. So you have your hands deep into these businesses from an accounting perspective. In some cases, you're also involved in the marketing side. So you've obviously got your ear to the ground in the industry. What's your thoughts on where it's going, right? Like, are a lot of brands, are you starting to see any type of pivots in any way, shape, or form, either from an accounting perspective or from a marketing perspective, or just how they're running their business in general?
Yeah, it's a great question. I'd say that, the funny thing about accounting is that, also unfortunate insofar as being able to talk about it, is that generally it doesn't change. It's the same stuff. It's not about market. It's not like marketing. There's some new exciting tactic every week. But I will say that there is, what I've noticed in the past year or so, there's been a very substantial increase in the amount of founders who have an awareness of certain financial terms and concepts, in particular something like contribution margin. Like that became a buzzword for quite a while in marketing circles, because people just kind of came to a point where they understood that it's not all about just having a great ROAS and stuff like that, right? Especially because basically cost to advertise just kind of perpetually increases over time. I'm sure with the TikTok ban coming around, there's a good chance that cost to advertise is going to shoot up even more, with a lot of that money kind of moving back into Instagram. So from that perspective, the need, and I shouldn't forget also the fact that there's also been less investing activity in recent years as well. So there's generally, it has kind of trended towards being a little bit more difficult, like e-commerce as an industry, a little bit more difficult a place to win. So from that perspective, people have just been a lot more attentive to just running a bit more of a, let's call it, sophisticated business in terms of actually paying attention to your financials like any other business would, rather than being kind of like an old school cowboy thing where you just kind of let some ads rip, see the ROAS go up, Shopify revenue shoot up, and you're like, yeah, I'm Gucci, everything's great. Now, like, you actually have to, be a big boy and like pay attention to the financials and look at your cash flows, look at your margins, and make sure things make sense. So it's nice because I think the general community has been sophisticating quite a lot, and so they're making smarter decisions and becoming more aware of how important it is to have good data.
Yeah. One of the things I've been seeing for a while now that's been like one of my favorite things to talk about is from an omni-channel, like kind of marketing perspective. So obviously me being on the marketing side, that's how I'm looking at it, of like, you're running ads to a website. It's, just in layman, they're migrating over to Amazon, right? Like, and vice versa, et cetera. So from a marketing perspective, you can figure out how to manipulate that. How do you look at that from an accounting perspective? How do you evaluate, okay, you're spending X amount on advertising on Amazon and you're seeing Y. However, because you're having people bleed over to your website, you're also getting this. Like, are you looking at it from an extremely high level, or are you actually looking at it from like a per channel basis with the brands? And then if that's the case, how are they kind of painting that picture?
Yeah, that's an excellent question. So there's two aspects to it. Number one is that, we do typically break down financial reporting into a channel level or on a channel basis. From my vantage point, the way I often explain it is that selling on Shopify versus selling at Costco are basically completely different businesses. Your margins are completely different. Your timing of cash flows is completely different. The volumes that you're doing is completely different. The way that you drive increases in revenue on Shopify, mostly Facebook ads, versus how you increase it at Costco, very different. So they're basically two mini businesses of their own. So anybody who kind of merges them into one P&L, you're losing so much data that is very, very difficult to really understand what's going on. So absolutely, we'll segment things out. Insofar as how we kind of draw the interpretations, a very significant amount of it will overlap with what marketers look at too, which is basically omni-channel kind of presence, the halo effect, cannibalization between channels. All of that is extremely relevant. But we go, I'd say, maybe a step further, in addition to also including all the costs that go to support those various channels. So simple example, just to kind of illustrate it, would be when you launch at a wholesale. Let's say you go into Costco. So you launch over there, you're doing a lot of sales. A big chunk of that is going to cannibalize sales from Shopify, undoubtedly. At the same time, a lot of the Facebook ads that you're running, maybe your ROAS isn't quite as strong on Facebook, but you also know that you have the halo effect of all the ads that you're running over there to be able to support the Costco presence. So that part, again, marketers are quite well aware of that. But we'll then start also looking at all the additional costs that go into supporting a channel like Costco. So how different your margins are, how much the shipping and distribution costs are there, and then also everything around commissions. So if we're talking about like a larger strategy with a lot of different wholesalers, then you have a whole sales team, you have a lot of commissions there, and the cash flows are also very different. So you might have, a really good week on Facebook, and you'll see that revenue within the week, essentially, and you'll pay your ads like 30 days later, but you'll get your Shopify revenue a few days delayed, but you'll get it right away. Yeah. Whereas on Costco, you're going to run ads for quite a while. You're going to slowly build up that awareness, and you're going to get an order from Costco. You're going to ship it to them. It's going to take some time for it to hit the shelves, and then you're going to collect from them 45, 90 days, whatever the terms are, way down the road. So even from a cash flow perspective, it's just a completely different beast. So there's a lot of additional things to consider, but tons of overlap with what marketers are thinking about too.
Do you find that is kind of how most brands are looking at it, as like more of like an individual channel, and then marketing is just kind of like a bleed over in all of them?
I think that a lot of brands, I'd say it comes down a little bit to their sophistication. A lot of brands come to us where kind of all their brands or their channels are kind of blended together. So the founder oftentimes has an intuitive sense of the fact that they're kind of very different things. And so they'll kind of like do their own little math, if you will, to be able to see, okay, how's wholesale performing? How's Shopify performing? But in terms of what they're getting as financial statements, it's all kind of blended together. And I find that's kind of the interesting disconnect where like we recently started working with a brand where he basically had an internal person rebuilding the entire P&L based on their sources of data and ignoring what they were getting from their accountants because like, well, this is how we want to look at it. I'm like, but yeah, but you can just get your accountants to do it that way. If they're breaking it out the right way, you don't need to have the work done twice. So intuitively, they know what they want to see, but they're not accountants. So they just kind of like cobble something together to get the information. But oftentimes it's the accounting side of it is not done ideally from day one.
Yeah. That makes sense. What's like the biggest problems you typically come across once you're like, okay, we're starting to work with someone, let's get in there. 9 times out of 10, what's the big problem?
So not uncommon at all to see, depending on who they were working with in the past, but especially if they're working with like non-e-commerce specific accountants, very, very common to see people just taking the cash coming in to your bank from Shopify and just booking that as revenue. Same thing with Amazon, like I mentioned, just book that as your revenue, not really identifying the fact that there's a lot of different expenses in there. So the information is completely skewed in terms of your sales, your discounts, your transaction fees, FBA fees, commissions, stuff like that. The other one, very, very common, is inventory. Everybody, like every brand I know, struggles with inventory tracking, inventory costing, knowing your cost per unit. If you don't know your cost per unit, then you can't calculate your break-even ROAS correctly. Like that is a complete disaster. Everybody has a problem with that.
It really never ceases to amaze me how little brands actually know their true COGS.
Yeah, absolutely.
It's really impressive. Like I am always shocked at some of the conversations I have with some brands that are guys doing well into 7-8 figures, and you ask them like, all right, what's your COGS for like this product line? They're like, I don't know, I got to figure it out. I'm like, okay,
no, 100%.
I don't know how you're going to figure out anything else then.
No, very, very common. A brand cannot give you an accurate break-even ROAS. They'll give you a rough number, like, if you're above a 3, you can scale to the moon. It's like, all right, yeah, but what's your actual break-even ROAS? They don't know.
That's amazing. So what's the next steps with UpCounting? Are you guys exploring just continuous growth with the company? I know some agencies, they start looking at like software stuff, like, or what's the game plan?
Yeah, it's a combination of things, to be honest. Like we've got a lot of ideas. So on the one hand, we do want to just keep on continuing to grow with the types of services and clients that we have, but we're looking to kind of implement software in different aspects of the way that we deliver our service. Ultimately, thinking, how do we continue to keep adding on value to what we do? I'd say in our space, we're one of the younger companies. A lot of the other ones that are competitors, if you will, have been around for like 10 years. We were only about 4 years old. So there's a lot more that I keep thinking and theorizing about, like if we did this or this or this or this, we'd be able to provide even more value. So for example, cash flow forecasting is an easy example. That's a fairly manual process. So the more we're able to kind of make that easier and more accessible, then we can provide that to more and more clients for a lower cost so that more people can enjoy the value of something like that. So we're constantly making, strides in so far as what we can do to kind of improve things. Inventory as well. Big one, just because a lot of people have that problem. A lot of people don't have a solution. And we'd like to be able to, we are able to work with the solutions they bring, but we want to be able to kind of bring them solutions too. So just constantly iterating on the product, make it as good as possible. So nobody could possibly find anybody better than us to work with.
I apologize for asking this, but I know this is like the sexy term that everyone always has to ask. So like, how much are you leveraging AI to figure out those kinds of data points?
Not enough at the moment, just because there aren't enough tools that are doing a great job of it. But it is something we're kind of working on and exploring in the background because we know that is future. So it's not by any means something we're afraid of or want to ignore.
Yeah. I can see its potential, but I completely agree. There's so many things where people post stuff and they're like, look how great this is. And then you go to do it and you're like, it's actually not that cool.
Exactly.
This is great. Abir, really appreciate your time. This is awesome. Super appreciate all the insight that you gave us today. I would love to give you the floor, let everyone know where they can find out more about you and of course, more about UpCounting.
Sure. No, I appreciate that. So UpCounting.com, UpCounting, if you want to work with us or just kind of learn more about our services. And if for some reason you want to follow me, I'm all over the place, ABIR. either Abir_CPA or .CFO, depending on the platform. My name's unique enough. You Google it, you'll probably find me.
Beautiful. Abir, thank you so much for being on the show. Everyone who tuned in, of course, thank you as well. Please make sure you do the usual thing, rate, review, subscribe, all that fun stuff on whichever podcast platform you prefer, or head over to the ecommshow.com to check out all of our previous episodes. But as usual, thank you all for joining us, and we'll see you all next time. Have a good one.
Thank you for tuning in to the E-Comm Show. Head over to ecommshow.com to subscribe on your favorite podcast platform or on the BlueTuskr YouTube channel. The E-Comm Show is brought to you by BlueTuskr, a full-service digital marketing company specifically for e-commerce sellers looking to accelerate their growth. Go to BlueTuskr.com now for more information. Make sure to tune in next week for another amazing episode of the E-Comm Show.